All right, hello and welcome. This is the third attempt this morning. It's 10:10 a.m. I'm working on my audio. I think it's working now. We're going to be upgrading the dry cleaning financial model. It's a very well, it's an older template. It's not super old, like five, maybe 4 years. Uh, so you can see it's pretty simple, and we're gonna add a three-statement model cap table this week on it, and do all kinds of stuff. First, let's make sure the sound is working really quick. Let me reset this. Let me reset this. Oh, okay, we have sound. Nice. Okay, so sound is working, so that's good. Um, let's talk about real quick last week because last week was huge. I upgraded the enterprise SaaS model, added a monthly and annual income statement, balance sheet, cash flow statement, uh, and also with the balance sheet, we did an unearned revenue row for current liabilities, which took, uh, if you select a yes to say you want to collect all your cash from these contracts at the beginning of the period instead of throughout the life of the contract, that means you're going to have unearned revenue over time. So that was the item we had to add to the balance sheet, which worked really well. It was great. Um, Other than that, this was a really smooth integration last week, and now the template's better. No change in price. It was still 175, but now you've got financial statements, dynamic capex with depreciation. Uh, so that was great. So that was the first thing we did last week. Then I went and added this HR tool for expected savings from terminations. It's a financial impact calculator, and it's not the funnest thing to talk about, but sometimes companies can't support their payroll for whatever reason, and whenever they have more information rather than less when making decisions, it's going to be better, and that could possibly mean, knowing exactly what your financial impact is, you might be able to save more jobs than you might have thought. So so this is a really important tool that I built, and basically what happens is any an HR person can come in here. There's a bunch of I think 20 different departments. You can put your head counts, all the salary information of everybody, and it tells you what your remaining year savings will be and annualized savings will be if you make cuts. Um, so and there's also a detail tab where you can actually put an individual network roll up into a summary. So this was great. Another great thing to build, and great as in helpful. Obviously, it's not the best topic, but it's just something that it's just something that has to be done at some point or sometimes in some situations. So HR tool, and then finally we ended last week with a great template upgrade to the to-do list tracker. So as you know, this thing I built a couple years ago, and it was tracking your to-do list tasks that were recurring, but it didn't have a database or anything. When you did a task, you could enter it every time you completed something. So now it does, where I built a database into this template. It's a Google Sheet tracker, um, and you can see the videos last week on it, but you enter every time you complete the task and the date you completed it, and that will roll into the main summary that shows when the last time you did something was with some cool filter logic. And then I also did a summary where it shows the amount of times a task was completed each month and each year. So this was great. And the reason I did this is because two people on YouTube came and said, "Hey, um, we want this functionality." Over the course of 6 months, I had two requests of the same type. So that's enough for me to say, okay, this needs an upgrade. So we did that last on Friday, and that was the week. So this week we're going to do the dry cleaning upgrade, which I'm going to do right now. This is part of the industry financial model bundle, as well as you can buy it separately. Dry cleaning, $45 one-time fee. We're going to upgrade this right now. Uh, and then don't forget, if you want to support the channel or just get a lot of cool stuff, you can buy templates on smarthelping.com. I sell all of the models I have for $999, which is a great deal. There's over 120 templates, all unique, logic, very helpful. I've got stuff for joint venture distribution waterfalls, SaaS and recurring revenue structures, industry specific models, accounting and finance, real estate calculators, underwriting models, human resource trackers, personal finance tools, Google Sheet architectures and automated logic, sales pipeline in Google Sheets and Excel, valuation, and all of these things. I mean, there's plenty of templates that have spent thousands and thousands of dollars just to build one of them. So to get all of those for this price, the insights you get into general modeling and tools for your business is insane. So check that out. Uh, and if your organization uses anything Excel or Google Sheets or wants to analyze their logic, optimize, this is, where you start. Now, having said all that, let's actually get into what we're doing today. It's 10:15. So dry cleaning. Basically, what I had done in this original template was put in a tab, so costs, revenues, we're gonna update all this, financing. Man, this was before I even started removing grid lines. Return summary, and then a P&L summary. Yeah, we've got a lot of updates to do here. So this goes up to 10 years. I don't know why Excel is still kind of lagging for me a little bit when I switch tabs. I don't know what that's all about. Um, we're not going to need this. So it's an annual only model, which is important. I need to pull a template that's annual only to upgrade this thing. So when's the last time we did one of those? And trust me, it's actually very different to do a three statement model with annual only instead of month to month rolling up into an annual. So let's see. Which one? The food truck one, I think. Let's open that up. I think this one actually might be a great fit. Yeah, this was annual only, so we can pull all this logic. And I actually love having all these templates I can pull from myself too. I use them to do these other upgrades. I use them for all kinds of stuff. So yep, these actually revenue assumptions are very similar. The capex is going to be similar. I mean, let me look at this dry cleaning model. What did we actually do that was different? Oh, so the cost structures are definitely different. Yeah, we'll have to pull all that stuff in from the other one. Startup costs, financing, so this is going to work all differently. Ongoing costs, and we've got to increase over time. That can probably stay. So here's the revenue logic, items per day, and what I'm going to look at is, does it make sense to upgrade this to work a little bit differently? So dry cleaning basically is saying the average items per day, average ticket price per item, working days per year, and then this is the annual revenue from that, and then we just have annual growth and then stabilization. And then from that, you can see just revenue over time, your costs, EBITDA, debt service. It's pretty simple. It's a nice layout. It's very clean, but definitely simple. So I think I can keep a lot of this logic and we can upgrade where it makes sense. Uh, yeah. Yeah, I like this. In general, this is good. This is good. Okay, so let's get all our tabs in. So we're gonna have to add in validation tab, global control. This is gonna be called debt schedule. We'll have to format all these tabs too. Debt schedule. We're gonna have capex, cap table, um, income statement annual, balance sheet annual, cash flow statement annual. And the reason why the three statement model is so important is because it gives a general understood format for what the financials look like. And it's also like a giant sanity check as well on the balance sheet. So it's very important to have those. You can integrate any financial model could fit into one. It does take some finesse. It depends on what you're integrating from, but basically it's financials in a generally accepted style. All right, we're gonna need a new color here of yellow. Let's get the light yellow for all the input sheets. So that cap table. What else are we gonna have in here? So dry cleaning. There's no inventory. Um, Startup costs. So here, do I want to pull? I think we'll redo this. Put our own startup costs tab. What else is on here? Ongoing costs. So this can stay. I like this, but this will be, all this logic will be removed. These are fixed costs. I'm wondering, is there any variable costs I'm missing here that would make sense? Um, so, for example, we have revenue assumptions. We're saying 200 items per day. Now, what is there any cost that we can directly relate to providing this service? Um, is the question. That's not a fixed cost already. So, like here we have workers, rent, legal, accounting, just general costs of operations. Supplies, like do we say, every I think we definitely have some variable costs here that we got to account for. And it's going to be based on the amount of items per year. And what we can do is just do a general, um, we can say, let's see, what's the best way to do this? Well, I'm going to have to bring in the item growth per day into like this 10% growth assumes you're doing more items over time. So every item we could assign like I don't know 10 costs to. So it could be, what's your cost of soap or not soap, but whatever you clean the stuff with. There's probably like, up to 10 different things you could put for every that you can allocate directly to an item, or maybe less than that. I don't really know. But the point is, the logic is there for you to fill out based on your operations. So we'll probably add some variable costs, uh, which is fine. That's no big deal. That schedule. Let's see. What other tabs do we need? Terminal value. Right? Is there any exit assumptions on this? No. Also, it's going to be going for a max of 10 years, not 50. You clear all this out. Uh, we don't need this. There's going to be way more advanced return summaries and IRR, just kind of cash flow analysis. All that's going to be added in, so we don't need any of this. This is just going to be called the annual detail. Right, that's what I called it here. Then we have executive summary, distributions. Let's add all that in. Okay, these are all summary sheets. What else? Annual detail that. I mean, I think that's most of it. Yeah. What logic? Okay. Well, we could probably start pasting this in. So validation here, global control. Add the disclaimer and all that too. This is going to be called Dry Cleaning Co. LLC. Okay, that's fine. Obviously, we'll have a different video overview. Disclaimer is good. And all our checks. Let's put in, so we don't need this. CapEx we'll need. This would be like for machinery or equipment that's depreciable, is what you'd account for with the CapEx schedule. I'll format these in a bit. I just want to get the logic in here. So CapEx, startup costs, cap table, what else? Terminal value. Oh, I didn't add that. Let's put that in. Okay, revenue costs. I think that's everything. Oh wait, let's continue on. So we got income statement. We have balance sheet. And cash flow statement. Let's put in distributions and executive summary. Okay, looking good. Now, I think that's everything. So I don't need this. Oh, actually, I might need to reference this. We'll keep it in here for now. So now here's the magic trick. We go file, make it, or find and replace. And we want to replace anything that says, in brackets, food truck V2. I want to copy that, put it here, and we want to replace that with a blank. And that way, it will then make all the formulas that are interconnected. And notice that's why I made all the tab names the same. And all the tab names have a space in them. That's all calculated and very important um, to have to make this work. So we replace all, and everything should replace. And then now we have all formulas working within each tab, and all that logic is now preserved from the old template. Oops, we gotta go a whole workbook. Gosh, shoot, we're missing something. Okay, let's see where we're missing a reference, so we'll have to redo that. But let's see where it might be from. I'm guessing all we have to do is go and look where it stopped doing the update. So these are all proper. Probably the income statement if I had to guess. Yep, so this is, let's check annual detail. Or no, that wouldn't have anything. Terminal value. Okay, so these all updated. It's just the income statement. So annual detail. We have that. Global control we have. Global control. Well, so this whole thing, let's go back. Terminal value has everything. So I'm trying to find where it had error. Cap table is updated. Let's look at the balance sheet. So that was not updated. Validation. Let's make sure. Yeah, validation one. What am I missing here? Did I misspell something? That schedule. So see, this is where it can get tricky. So we have to figure out where we misreferenced. Annual detail. That annual detail tab is there with a space, so there's no reason. Global control is there. Ah, here we go. So it might be on the distributions. Executive summary. Here we go. Here we go. Annual detail revenue assumptions. Revenue assumptions. So we can just change that. Now all that logic will be different, but let's put that just so we have the, so undo, so it's back to how it was. Okay, now let's try it one more time. Replace all on the whole workbook. Perfect. Okay, now you can see as I go through, it's referencing the right, this is the right workbook. Okay, that's great. So now we got to start fixing everything that's broken, updating the format. So one thing we need to do is these all need a light border, not a dark border, so it looks cooler and cleaner. Also, we need blue, royal blue text and light yellow, so we know what's editable. Let's do that on all these. Oh wait, yeah, this is a calculation actually, so we want this to be clear, and the rest of that's fine. Oh, this won't be relevant anymore. Yeah, we'll work on the revenue stuff here once we get the format. Let's see, so this. And then let's go make that look better. Okay, good, good, good. CapEx, we just want to do 15 width on these. Go over. Okay, that's fine. Here we want to freeze rows and columns. Go out for 15. That rest that's fine. Here, remove grid lines. Let's just make this gray. That's fine. Executive summary. Here's this kind of cash flow analysis. Oop, column width. This can be match that. All right, so we're getting the formatting all nice and clean. then we'll start fixing references and we'll probably do the revenue assumptions today. And then tomorrow we'll actually finish up with all the integrations. $15, spread it out, grid lines, freeze. Alrighty, so we got all our formats in, we've got our cell references updated to the new workbook. Now we need to start updating all of the formulas and revenue possibly. Let me go over here. Okay. So first things first, revenue. Do we want to change this is the question. Um, so number of operating years, we don't need this. All this stuff's going to be on the other tab. So we'll have EBITDA multiple, which is what we want. Usually these types of businesses are valued on a multiple of their operating cash flow or earnings before interest, tax, depreciation, amortization. So revenue, how do I want to do this? I think so items per day. The question is, do we want to do monthly growth? You know, so this is just assuming in the first year you do 200 items per day, 300 working days per year, $180,000 is the top line revenue. So pretty simple. It's not going to show any monthly growth. It's only showing annual. And you could define the years of growth. Hmm. Well, let's look up here. Dry cleaning revenue sources. Let's just look at something here. Dry cleaning. 5 ideas to increase your dry cleaning profits. So this might give us some insight into what logic we might want. And the dry cleaning business profit margin can be razor thin. Maintenance, equipment, cleaning supplies, payroll. You need to keep overhead low and maximize revenue from every customer. Flawless interiors. While outright perfection may be unrealistic, you should set sights on spotlessly clean interiors. You are a dry cleaner after all, so having gorgeous interiors helps send a message that you generally care about delivering quality and detail. Okay, so just having a nice place. Communicate and advertise other services, upsell. So in sales, there's yes, upselling in which you guide customers purchase add-ons, also. All right, yeah, the theory. So dry cleaning, be sure to inform your customers of other services you offer, such as pressing, stain removal, garment. Okay, this is what we want. Here is what we want. Specific to the dry cleaning business. So these other services we're going to put in here for sure. Pressing, stain removal, garment delivery, and or special material cleaning. Payroll, we got fixed cost stuff. Yeah, yeah. Okay, perfect. That's all we really wanted. So the question is, how do we implement these revenue sources? So there's just your regular dry clean, but now we got add-ons. And so we need to price each of them. We need to say how many customers will get those different things, and also how many, what's your capacity for, a single location to be able to do this stuff. So what I think we can do is instead of items per day, we're going to say um, average customers per day, and that's going to be, let's say, 20, 20. And this will let you see if your assumptions make more sense by saying, okay, how many customers am I handling per day, and how many different services am I doing, and is that feasible? So we'll have customers per day. We don't need, this is completely going to be redone. Working days per year. I think we can keep that. Say it's like 340, whatever. You can put in whatever. It depends on your situation there. Now growth, we then would have to say, yeah, we don't need this either. Okay, so we're just overhauling this whole thing. So let's just think about it. Customers per day, 20. So every day, percentage of customers getting dry cleaning, average price per dry cleaning. And you might have different levels, but you can just put a weighted average. So um, let's say 90% of them get dry cleaning, and the average dollar cost of that is, I don't even know, what's the general cost of dry cleaning? 11 to 13. Okay, so per garment. Oh, that's the other thing. So you might have multiple garments on average too. So you want to say average total price account for possibility of multiple garments. So just on average, if somebody just gets dry cleaning, what on average are they going to pay you in total? Maybe it's $35. So 90% of these customers are doing this. Now we also have these other services. 1, 2, 3, 4. 1, 2, 3, 4, and we have pressing, stain removal, garment delivery, special material cleaning. Okay, and let's say, maybe it's 25% get this, 10% get this, 35% get this. These are not mutually exclusive either. And then let's say, 5% do this. And you have to also do price. So these 20 customers, 25% do pressing, and what's the price of that? Which you'll have to figure out. Let's just say, I don't know, 12, 15, 10. 25. I'm just making these up. The key is that you're going to have logic so that you can account for all these different things. Okay, so in a given day, you've got, actually, let's just put this here so it's cleaner. Average price, percentage, and then these are add-ons. All right, 20 customers a day. Each customer, you've got X percent do regular dry cleaning. What's the price of that? And then you've got all these other different add-ons that they could do. And then you have average per day that you're doing these services. So 90% times that. It's okay if these are decimals. It's completely fine. You're just estimating. So 18 dry cleanings per day in this case, 5 pressings, 2 stand removals, 7 garment delivery, and 1 special cleaning. Based on those percentages and customer counts, maybe there's 50 per day. We can give these all 1 decimal. That's fine. So now we have very different revenue. Now what we can do is say, watch this. This is so cool. So monthly. So first of all, start month, or no, it's going to be in the first year. Shoot, we only have annual. Yeah, so we're gonna have to say we're gonna have to do it. So annually we have actually we can just go per year because we're gonna need these for the variable costs. And then we'll put working days per year right here. Let's just say it's 300. Holy moly, I'm hungry. Should have eaten today or eaten more this morning. So 13,000 of these, and then revenue per year. Got this many times this price. And totals. Well, you don't really need totals for the other stuff. All right, so you can see how much revenue you're making from each item, total annual revenue from the location, the amount of times per day and per year you're providing the services. And then when we say growth, what we're going to be growing is the total revenue. And when we do that growth, because we got to do variable costs, we're going to have to also grow in the same. It should be the same proportion. You know, let's double check. So if I raise that 10%, 55. So if I go 670, yeah, okay, that makes sense. So they're just proportionally growing based on customers per day. Service. cells C9, C11 to C14, you are defining the percentage of customers that buy each of the services. Okay, average price, that's good. This we can use for costs. So now we can go, so fixed costs, these are fine actually. These can all stay exactly how they are. But what we're going to do is another schedule for variable costs. Driven off item, services provided count. So let's just say there's these services, and what we can say is variable cost per unit of service delivered. And then you say, okay, for every dry cleaning, it's costing you X dollars and X, Y, Z. So maybe, $1.50 for every pressing, so you get the point. For every pressing, it costs maybe $3. For every stain removal, maybe 25 cents. For every garment delivery, maybe $6. Special cleaning, maybe $15. It depends on what you're doing. So here what the point is, we could define a cost per time the service is provided, and that will plug into based on these times per year it's done, and then we got a cost. And then your fixed costs over here, which is just basically general and administrative marketing, sales and marketing, all that, SG&A. What did I do? I want to make this top the same. Fixed and variable costs. Man, I love upgrading the older templates. This is so cool. All right, so costs, that's fine. We've got, we need to put an annual growth here. Annual sales growth will apply evenly to all the items. Let's just say, maybe 5% per year. Or we can do this. We can say year 1 to, define the growth evenly. So you can say how much you think you're going to grow in each year. And I will show what that resulting count of each item delivered will be per day and per year, so you can see what's feasible, and then you can adjust the growth rate accordingly. Yeah, this is this is quite a bit of an upgrade from what we were doing before. Financing, that's got to reference this. me see. How did I do the debt schedule on here? Okay. Right, because it's annual only, so you're assuming financing is only going to happen at the beginning. We've got some other stuff I got to do. We'll get into that later, though. Okay. So we've got variable costs. Now what we got to figure out is, let's start implementing this. Our annual detail is going to be quite a bit different. So let's insert some stuff here. So we have services provided will equal whatever you define here, and these add-ons. Okay, that's fine. So services provided. Now, what we do is go equals year one, we go revenue. And then, oh wait, we need counts, we need counts, we need counts. So here, and then this will drive growth. So we go this times 1 plus index and pull the growth here if our year matches that schedule. So we're going to assume pricing stays the same. I gotta lock the letters as well here. So there's how much you're doing in services per day. Now this, let's just double check. And this should all be 10 or whatever percent, 5%, whatever the growth is. Good. Perfect. So we're 5%, 5%. So it's growing at whatever percent you put in here. Let's say this is 10 for year two. Minus 10, or sorry, year three. Oh, wait, hold on. Year two is 10. Oh, right, because it's year one is what it is. So really that's year two growth, which is fine. So it's just offset. That's fine. So in year two, your growth rate is whatever you put for year at. That's kind of confusing. Let's just remove this. Start this at 2. Because year 1 is, this is year 1. And you say in year 2, what do you grow into? And 3, etc. So, move this over. And we're all good. Now we go, what's this equal per day as a check, and we don't want to put that here. I want to put it under here. So here's your per day capacity check. So based on that growth, how much are you actually doing per day and all these things, and is that reasonable in each year? And we'll go, year 1, and we'll be able to see this for each year. It's always good to make sure you have some kind of awareness on what you're saying about your or what your assumptions are actually saying. Let's get this all the same size. All right. And so it's this number, whatever that is, on the monthly detail divided by working days per year. So per day check. So this is how many you're doing per day over time. No need for decimals on that. So 45, 50, 52, 55. Go to 10% per year. Now question, why 45 to 50 to 54? What's going on there? That seems off to me. Let's see, what are we growing at here? So here's your growth. And do this divided by the previous year. Oh, it's 10%. I guess the decimal, so 50, 54, 60, 60. Okay, yeah, that is right, that's right. Let's go say 10% in year 2, then let's go like 5, 5, and then like 3. So here's your per day items. You can see, is that feasible to do these different things that many times per day? And you would adjust the assumptions here accordingly. So year 1, on average, this is what you're doing per day. Year 2, on average, this is what you're doing per day. And you just make sure you're not going over the capacity of the location. So now we have that. We can also do services provided, services revenue, and then we'll have total revenue right down there. And these can all be grouped if needed. So revenue, I'll just simply times that times our revenue assumptions for each of these. Oh, where are we at? So 9, 10, need 11. Okay, simple as that. And then we have our revenue. And you can see growth here. We'll put a growth rate in, which will just mirror what your growth is. It's just a nice check to see though. So 10, 5, 5, 5, 3, 3, 3, 3, 10, 5, 5, 5, 3, 3, 3, 3, 3. Okay. These you can give a little italicized light color. Alrighty, so that's a bit better than what we had before for revenue. It's a lot more granular, makes a lot more sense, and now we can do variable costs off of it as well. Your revenue subtotal can be bolded. Okay, this looks good. So fixed costs are here. We're going to add something called variable costs. Let's, we don't have many we can insert here. And then we granulated it down based on per type. How do we do this? So we're going to have to just hard code that in. So it's these, but we don't need, we only need to see this: dry cleaning, pressing, and here, yeah, we don't, that doesn't need to be all. Okay, so dry cleaning, variable costs for each type will go the count per year times the cost per unit provided of service. This. So there's your variable costs. And percentage of revenue. 12%, and that's basically because if you look over here, well, it's going to be a combination of what the costs are for each item and the count of sales of each item and their price. Okay, so that's pretty good. Services provided. Yeah, services provided. Let's clean this up. Revenue from each service per year, total annual revenue, variable cost to provide each service per year based on the count of things done per year and the cost per unit done. Then we have our fixed costs. Now EBITDA, well now we have, so this is, we can now add a contribution margin. This is like what the business makes without any overhead. And that would just be total revenues minus these variable costs. This is a very important number. Okay. And then EBITDA is just going to be the contribution margin minus total fixed costs. And then this is profit margin. Then we'll have other things, debt service. This we don't need. We're going to have all advanced logic for that. Startup costs, sale business. Yeah, we'll add some more logic for those things, and that's fine. I'm really liking how this is turning out. We get added quite a bit of advanced logic, and it's flowing pretty smoothly. Okay, so revenue, total variable costs. Let's just do a couple checks here. So this is taking stain removal times stain removal in your or stain removal cost H7. Stain removal, perfect. Okay. I think we need, so percentage of customers getting, this is fine. Let's cut this out. Let's say dry cleaning, pressing. What are the rest of these? Let's make this a little bit cleaner. Okay. Percentage of customers. And then you got the clarifier here. Now I can dynamically reference all these into here. So if you update anything, it automatically updates about the services provided. I group this. All right, looking good here, looking good. So here's where you actually enter the names, and these will flow through the model. Let's clean this up. All right, customers per day, working days per year. Here's your services. Here's your sales growth per year. Sanity checks based on that sales growth for how much of the different services you're providing each day based on working days and customers per day. Year one customers per day. Then we're growing each of these totals by that. And that's fine. That makes sense. Hold on a second. Okay, yeah, here it is. So I was making sure I'm using this customers per day calc in here. So you have 50 and then 10% get that, 35.5. And then you multiply that by the working days in a year to get this. Or actually, we can just simplify that and go this times here. Should be the same number. Yep, perfect. So year one revenue. We've got costs, fixed costs, variable costs. Now here, I can now make this look better. So dry cleaning and then the add-ons. then we'll put a little note here on this. This is defines the cost per unit of service provided, i.e., if you did 20 dry cleanings per day, what is the cost per per one dry cleaning? And then that one cost would go in here. So $1.50 per dry cleaning, expressing, and there could be multiple costs that go in each of these, and you would just add them together and put them in here, whatever it is, the total is. Alrighty, we are moving and grooving here. Debt schedule, I can update that tomorrow. All of this stuff we can start updating tomorrow. The key is we got a new annual detail that has brand new revenue logic and variable cost logic. So this looks great. Let's put a top and double bottom on the EBITDA. These are our total fixed costs. There's your profit margin. Okay. This is looking good. We'll clear all this up tomorrow as well. And we'll get the income statement, all this going, distributions, executive summary, and all these different things will be connected, and we'll link it all to the global control tab. All right, I'm excited. So this turned out to be a lot of upgrades, and I'm happy with all upgrades. It needed to be upgraded, and now I feel really good about the dry cleaning financial model. So I will see you guys tomorrow. Don't forget, check out smarthelping.com. Again, you can get I've got over 120 different templates. Right now we're working on the industry specific one right here, dry cleaning right there. We can buy all kinds of templates here, all unique logic, all carefully built. And no, these upgrades, I've gone through all the startup models in my top 50 sales. I'm actually working down into dry cleaning now, and there's going to be, I've got probably 20 or 30 more to go through before we're done, and then we'll start doing brand new ones. So we're just in the upgrade process. Also this week, if I could finish this template tomorrow, I'll try to do a new template. Like I said, last week we did the HR tool, and we also upgraded the uh, to-do list tracker on Google Sheets with some cool stuff. So um, who knows what we might do at the end of this week. And remember, you can buy all the models here. If you check out Financial Models tab at the top of smarthelping.com, $999, you can get all the templates I've ever built. Pretty good deal. Alrighty, take it easy. Like the video, subscribe, and I'll see you guys tomorrow morning, 10 a.m.